Hey, everybody. Thank you for joining us here in Rio. I have the immense pleasure of introducing you to three very intelligent, very shrewd, very sophisticated, very blockchain-focused VCs that we have working within the Stellar ecosystem. For the most part, they've deployed capital into the Stellar ecosystem before, or they're looking to deploy more in the next 12, 24, 36 months. So the commitment is there, and it should be a great panel. You guys mind taking just a minute to introduce each other and each of yourselves and your strategy?
Sure, I'll kick it off. Even though we look similar, Daniel is not my cousin, my long lost brother, but we always get the Spider-Man meme whenever we hang out together. Like, feels like we're looking at each other. So Marcos Fernandez, we're a San Francisco-based venture capital fund. We also have a growth consultancy, so we work with early stage companies, helping them both in strategy and execution of those campaigns. So we have a really special relationship with Stellar, both in where we look to invest capital, but also being hands-on in that growth. And that definitely goes hand in hand with our investment strategy.
My name is Tracy Li. I'm the founder of Claribay Capital. We previously rebranded, previously it's called A-Star Ventures. We are pretty well known in the US as a early stage blockchain payments venture fund. So we specialize in early stage, looking for the founders are building real use cases in the payment space. We've been working with Stellar, for over a year and trying to look for the founders, building on the ecosystem and supporting with the capital as well. So we focus in the US, but the second largest market is in LATAM. We're also having our reach in Southeast Asia, since payments use cases tend to be very substantial and very needed in these emerging markets.
Good morning, everyone. My name is Qin En. I'm from Singapore. I lead Onigiri Capital. Onigiri Capital is a fund that we just launched this week. It is a fund that focuses investing in blockchain startups, creating financial products and services. What's unique about us is that we are born out of a leading financial institution in Japan called Credit Saison. Credit Saison is the second largest credit card company in Japan, but more interestingly, in India, Southeast Asia, and most recently, Brazil, Mexico, we are very active wholesale debt lenders. So we operate financial services businesses globally, and we have the venture capital to support what we do.
So is it fair to say that you guys all invest in seed stage, Series A, max, maybe Series B, early stage?
Yep.
Early stage, yeah. So with that context, given that this talk is revenue versus roadmaps, I wanted to ask the first question about founders will typically ask, whether or not they should raise on vision or they should wait until there's considerable revenue or at least MVP style revenue. What actually carries more weight in your investment decision process when you're evaluating revenue versus roadmaps and ambition?
Yeah, so I think our experience might be a little bit unique, given that 3 years ago we really bet heavily on blockchain payments use cases. So we tend to gear towards to founders showing some early tractions, at least trying to go out to actively seeking customers. I think for this vertical, it is a market proven kind of use case. If you don't have any traction, you just give me like an idea. I've probably have seen like 100 pitches with a similar idea. But what I'm actually looking for is a founder is actually going out to do the executions, right? So on my side, we tend to focus a little bit more on just, be the founder, go out, look for money, look for customers, and then we can support you with the capital, right? If we like your team, like your execution. But I think it's also a little bit market driven, right? When there's a bull market, there's a lot of capital out there. Some founders can really utilizing their background, maybe their second founder, third founder, just out, going to look for a capital without anything. Occasionally we'll do that because if Zach come out doing a third company, right, we're the first check in, like we're happy to do it just with an idea. I think you need to really evaluate your team, your background, what you're looking for at the early stage.
Yeah, and Tracy does a good job of laying it out. Is There's spectrums. I know a lot of y'all know this, but early stage companies, there's imperfect information. So a lot of times you're making an investment on a founder. You look for founder market fit, past experiences. What can you do to kind of offset that? And as you grow, there's more and more information around traction, all the way until these late growth stage, in which case it's almost all traction. Like teams are great, but at that point you should be actually creating some sort of value to the consumers you serve. So this is a very unfair answer to the question, but a little bit of both. And this is why I have such appreciation for founders, because what you need to prove is that there's some sort of founder market fit, your past experience that gives you unique insights to the problem that you're solving. If you are pre-product, if you're early into a product, we like to underwrite a bit of traction. And there's not a particular revenue multiple there, but we just want to make sure that you are solving a real pain point and problem today. That's what we refer to as the wedge or the beachhead market. That doesn't have to be what you end up doing in 4 or 5 years that really takes off, but you just need to prove that you can ship product and that you can get it out there to solve that. But on the other end, you're selling this massive market and opportunity. So as a founder, a little bit of insights to our ecosystem, but we're investing in 25 to 30 companies per portfolio, and we are making the bet that there are 50 to 100x returns in that. That's the power law. That's what venture capital is governed by. It's maybe a separate panel for a separate day. But what you want to show us is not just the problem that you're solving today, but the 100x outcome tomorrow. So as a founder, as you're telling that narrative, the story, yes, we're solving this very particular pain point today, but this is ultimately the wedge that we're creating to get to this outcome tomorrow. And that at the earliest stage is what we want to underwrite. It's really team. And then you're selling this vision for total addressable market tomorrow.
Ish, before Jinan jumps in, when you say team, can you, look, we spend a lot of time looking through pitch decks and flipping through, hundreds of them a week is a task, right? Are you jumping in the earlier stages once you get past that first page to the team page?
100%. And Tracy mentioned this. I know, Jin, and we talked about it too. We get so many decks that you can assume that by the time you're on the phone with someone who can invest, like we understand the problem, we understand the solution. We really want to understand why are you solving this and how can you solve this better than anyone else? When we're putting together our portfolios, we're looking for exposure into particular companies and sectors. And so typically we already know the sector that you're building in, but we're trying to find the right team to back in that. And that's ultimately what happens in any new market. There's competition. So you ultimately want to back who you feel is the best. So again, as a founder, you want to prove this is why I am the best person to solve this challenge. These are the people who are on this journey with me. This is how we have a unique background and why no one can stop this momentum. And you almost kind of want to sell that type of velocity as opposed to spending all the time on like the minutia of particular products and sets. Let the investors on the other side walk you through that. But really the first thing you want to sell is this is why we're solving this problem today. It'll be massive tomorrow and no one else can beat us.
Fully agree with everything that has been said. I'll add a different dimension to it. The way I see it is less of revenue versus roadmaps, but it's about product versus distribution. And I think fundamentally, for at least for us, we care a lot more about the distribution part. Let's be honest, right? We're here today at Stellar. Today, if you're building a payment gateway, you're building a tokenization platform, chances are the product has been done before, or it can be built very quickly. And especially in the blockchain space, your smart contracts are online, your GitHub is public. It's so easy to sort of replicate and copy it quickly. So to us, product is very rarely the advantage, very rarely the reason why we invest. Obviously, there's always exceptions. But really what we care about is distribution, unfair distribution advantages. If you're building something for consumer, how are you going to get your product in consumers' hands? If you're going to tell me I'm going to pour a bunch of money on ads, like everyone else is doing that, right? So what's your unfair advantage? And same thing for B2B, right? Enterprise sales take such a long time. If you're going to cold call, cold pitch everyone, of course you'll do that, but that's not particularly exciting, right? What really excites us is when founders come here and say, there's this particular segment of audience, of customers, of partners that pretty much no one else there has, but we have it. And this is how we're going to get our first 10 customers, our first 100K in revenue. That is what excites us.
So then a follow-up to that then is, how do you actually discern founders' executional ability? Like who can actually perform? When you guys think about that and go to your ICs or previous to that, writing your deal memos and circulating it with the team, what qualities are you looking for from founders that can either show, hey, we're willing to kind of back this pony and these guys can execute, here's what they've showed us to do, versus the ones that just fall short of that? Are there any kind of particulars or is it just kind of feel?
maybe I'll kick it off with this. I think there are at least two areas we're looking at this. One is more like, tangible, like their track record in the past. Have they executed on similar companies or problems before, either their previous startup or maybe the last company they work at, right? There's a certain traction you can ask or see the proof, right? Or like, have they exited? I think there's the other side is since the company is super, super early, typically we dig into a lot of like either social media or background check or talk to other people they have worked for or worked with in the past just to get a sense of how these founders are able to execute, right? I think there's a number circling around in the early stage startups. Average is 3.8 failures for a founder to be successful in their startups, right? So there's a lot of like trial and errors. So for what we're looking for is really, have you done something that you relentlessly trying to pursue, right? I think that's very much the indication of has a founder has grit, has a founder can run through several crypto cycles, right? One of the things we've seen in the past is called crypto tourist. And we've seen the certain founders have building crypto, right? All of a sudden, AI is rising in San Francisco, Silicon Valley. And they ditch their crypto company, start building an AI. And then after a while, we found out the NFT market start becoming like one of the hittest market, right? To make quick money. And they pivoted the AI startup into NFT. So I think that's a really disheartening story for us VC to see, right? The founders doesn't want to execute on one single idea, keep switching gears whenever they see the market is changing. So back to the original question, right? Like we want to see a track record either directly or indirectly from the founders.
Yeah, and 12 years ago, I was the first generation of venture-backed founders in Southeast Asia, and I received this advice, which still holds true. You ask for money, you get advice. You ask for advice, you get money, right? And let me break that down a little. The best time to fundraise is actually when you don't need the capital, but to start building that relationship with potential investors. And what very few founders do very well, it's actually sending updates to prospective investors, right? What we want to see is that journey that you're on, and especially if we have the time to build a relationship where you make promises and then you come back to us and say, hey, this is what I said I would do. I have surpassed it. I think that to us, it's a huge standout quality. So if this is something that's on your roadmap, we definitely suggest, start your conversations early. That the best time to do it's a bit like the dating game, right? Like you don't want to go out desperate, like, say, please, like, date me. It just turns people off. It's the same logic. And I think when it comes towards the update, what we have seen is something that's very simple, right? And I sort of want to get into the nitty-gritty here because I think that's a lot of founders. Progress, plans, problems, right? Progress, what have you done? Plans, what will you do going forward? And problems, what are you trying to solve? Right? And we find that if you just follow this, it could be a couple of bullet points. You send this on a monthly, quarterly basis. It actually gives, very few people do that to begin with, right? So the fact that if you're able to do that, you stand out from everyone. And secondly, more importantly, it shows me that you are a person of your word, right? Whatever you said that was your plans, it becomes progress in the next update. And we also want to know what problems you're facing because maybe we can be helpful for that.
Yeah, I can't echo that enough. I read every update that I get from founders, and the ones that I really want to keep a track on, I send to all of my partners. So I can't, monthly is a lot to share, quarterly at minimum, but there's a long tail. And one of the things that we really like to underwrite is a little bit around humility and understanding how do you bring together a network around you to solve these problems. When we meet with a founder, we ask, like, what keeps you up at night? What are the biggest challenges you're solving? And if the answer is either not really significant or no, then that's a huge red flag, because what we understand is that every single startup will run into road bumps. And it's less about your ability to run through brick walls, but knowing the right brick walls to run through. You know how to build teams around you, advisors around you, ecosystem around you, and investors around you who can help you solve those really tough problems. And it's up to you to understand how to delegate those responsibilities, because at some point, everyone can't do everything for everyone. And so I'd say that's kind of the big one is feel free to be humble when it comes to the challenges that you're looking to tackle. The role that we play is that we work for you. We are out here opening doors or providing capital or new capital providers. So it's important for us through that journey to understand that you know how to tap into that as a resource as well. And kind of think about that with the problems that you share. It's usually a problem section and an ask section as you're providing those updates. Make those really tangible, because you'll be surprised how much of a value that is to just gives you good visibility to the business you're in and the challenges that you face in building it.
I'd like to just transition just a bit and talk about revenue. So not all revenue is created equal. Are there any businesses that you've seen, hey, explosive revenue right now, even more explosive revenue potential in the future, but that you guys have passed on for one reason or another? Are there things that eclipse revenue, perhaps deviations from the roadmap or the team like we talked about? Like, can you go in a bit further about what types of revenue, whether it's on-chain, right, through fees, or off-chain through like a SaaS structure or whatever? Like, what are you really looking for in terms of revenue dynamics for the businesses that you're looking to kind of put into your portfolios?
I think for us, the quality is more important than the number, given that we're early stage investors. Honestly, revenue is always a good to have, right? Great if you have it. But I think one thing that we always set soft red flags is, for example, counting grants as revenue, which grants are amazing, right? Don't get me wrong, but grants are not revenue. B, offering consulting services. So to us, when we see revenue, we always ask for customer contracts, right? Because what exactly are people paying for? And if everyone is paying you for like consulting, then you maybe aren't a product-focused startup, right? You are just a consultancy. So I would say optimize on building things that are sustainable and repeatable and scalable.
I think I have a couple of very interesting cases I've seen lately. I think one interesting one is as VCs, we actually share investment deals. I got multiple people sending me this, actual Latin payment startup, amazing traction, within several months, right? I can't remember the data. Let's say a few $1 million ARR per month, ARR, right? And then everybody asked me, Tracy, since you're the payment expert, what's happening in the startup? Like, what, should we invest? What's your opinion? So I actually spent time talk to the founders. I was also curious, like, this is not usual. And then what we found out is they have one really large customer. This customer accounts for almost 90% of the revenue. So for us, it's very unsettling, right? For other multiple reasons, we didn't invest into this startup. But after I checked in several months later, what I heard is there's some regulation changes. All of a sudden, they actually lost that one single large customer, right? So I think these are the things that, at least from my perspective, we want to understand your user or customer dynamic. Like how many clients you have, what are the regions are they coming from? Are you, seeking new partners? Because if you want to just heavily bet on one single customer, they can go away at any time, right? For different type of reasons. So that's really a startup like stood out to me. I think the other ones several years ago we passed on is also a payments deal, right? Doing NFT payments. I think back, 2021, even for Circle, when I was at Circle at the time, right? Dapper Lab is doing, I think, 300 million per month on NFT revenue, like transaction volume stuff. And then this little startup is doing NFTs. The transaction volume is relatively high for early stage. I think for me, it's just I don't have enough conviction thinking like 3 years down the road, the NFT market is still going to be, thriving, right? A lot of transaction volumes. Also because valuation is high, we pass on the deal. I think these are just multiple reasons. You also want to look at, is this actually fundamental use case people is going to use for years to come? There's a lot of cycle-driven use cases that we really need to think twice.
So we have 1 minute left. I just wanted to sneak this last question in real quick. If you could give founders just one piece of advice, fast, to align roadmap with revenue expectations, what would it be?
Traction. We're in Rio. A picture of football scoreboard. It is an indication of the success that you're having, but it doesn't actually explain what's going on the pitch. So one is like the revenue and statistics, make sure that that's known, but really what's important underneath is how many people are using it. What are the monthly active recurring users? What is the virality around that? If it's direct to consumer, what does referral look like? If it's B2B, how are they expanding that out? We are not trying to underwrite a particular number. We're trying to underwrite underlying traction and virality for the product that you have. Focus on that because the revenue will be an indication. It'll show up on the scoreboard if you keep playing the game hard.
Quickly, I'll say is the founders need to be flexible, ready to pivot at any time, right? The revenue may change. You may lose customer, one vertical disappear entirely. You just need to quickly realize and start, picking new verticals to get the revenue. So ready to pivot at any given time.
I'll wrap up what my fellow panelists say and emphasize the communication point. Shit happens. Sometimes you miss your targets, so you have to pivot. The key thing is to communicate, right? Communicate this not just to your existing investors, but the potential investors who you want to bring in.
Thank you so much. Any entrepreneurs in the crowd, reach out to these folks if you're raising on the Meridian app and then later on afterwards. Thank you so much.
Thank you.
Thank you.